Okay, I'll just finish up the confirmation. So sometimes it's good. We're trying to come into a play like contrarian. When you're in phase one, phase two, phase three, and how aggressive you are is different. So for the Russell or stocks this week as an example, to chase, buy puts and hedge after the move, right? And everybody is red, but really the edges to be shorting are here. These are, but if we're going or low, like, so that would be here, but there's less risk here at this price point, like 50, than here. If I buy 15.20 and I want to risk 20 points, right? Or if I want to buy in a couple lots, the third one in line down here, I want the lower price risk. There's less risk after I've dropped this far because you know that it can't continue. The deeper you get, less risk because it's easier to bounce. After the move, there's more risk. We've already moved all this way. There's a lot, like yesterday, there's already all this quote unquote people. There's more risk there because you've already had the move such a. So there's less risk here. What should I call that? From a distance perspective. Distance. So that type of confirmation where people are only eyeing up. You want the market to prove to you that it's the right thing to do. It's like you want the market to confirm you don't want to have a thesis and bias. And your best trades are going to keep moving in your favor, but that's like longer term stuff. That means it's going to continue, and that's, you know, that's showing me interest there. But then how you work into that lower low, it can't get heavy on. That's just, I mean, you can, but you're going to have to pay for your angle and distance and your exhaustion points. And you just have to have kind of that art of getting heavier into a drop like, because the problem is that then your bounce is sideways and then you get another lower low. So that's not really into lower lows as a general rule. Here without information, and you just give it one or two lots, you keep it light. And then confirmation for us isn't about price moving in the direction we want it to go, that we're. So if we're wanting to be long and price has a huge move, that doesn't. Oh, okay, maybe we made a higher low here. That's phase two. Week when we were right down here, and right, a new higher high, phase three. There's points to be more aggressive, or then you got a wall. You got a nice wall here. And you pull back inside that gift zone. That's an opportunity. But these are the more aggressive. So it's lighter on the contrary. And you can trade around those buys too. And then when the confirmation, we're like getting through here. But I think most people think that, like yesterday on the highs was some sort of bullish confirmation through 1550. This is the pullback inside of bullish. Then there's you could buy this on a break to a new high. You know, there's this type of move to a new high. That's confirmation. That you can add to, that we would add on a new high. But we don't like to add. Whoops, we don't like to add after a move from here on a new high. You've had a move down, and then you've had this buying opportunity where you then that kind of like, you know, I remember, and the cannabis stuff I mentioned yesterday, saying, oh, this is confirmation right into this candle here. So after they didn't looking for confirmation here, they didn't want to buy here, they're fearful here. See, this is a good example. You go from here to the new high, people think that's confirmation. They buy the new high way up there. How bullish this, oh, I've watched it for 5 days go straight up. That's I used to be here, do this early on in my career too. Pulls back after their buy, now they're fearful, now they're selling. When this is where you're buying. And then when you go from here to the new high, and be riding this. But then the person that was fearful here, they're fearful here, then they want to buy. And then they say things like, no, man, this, and you got it here. I've already watched this thing rise 15%, like, because up at 50 and I'll never get a chance to get back in. Well, sure enough, profit up there, and now you get to buy back 50% of this wall. So back in the, like, I've been keeping a close eye on this one. So there, you know, it's not, again, it's not based on what the price has been doing. It's based on the higher high here above 18, depending on how it gets there. But I'm okay, you know, nibbling here. I'll be a buyer back at 11, 12. There's just a lot to be nibbling in here. And then we start making higher highs again, then there's places where you can get more aggressive. And then BTC, just to finish my point, was kind of the same thing lately. Everybody gets excited when it's back in CM. It's had X amount percentage gain, but you have to be a seller into that strength and then wait for the pullback again. So everybody had this gap on futures. I'm actually surprised it filled it so quickly. actually traded really technical there. But you can't be chasing up here. Now is a chance to buy back in. Daily cycle is still coming down, but this has been a strong move. This is a good spot to get back in. Like, this is why you want to take on a new high at 8,400. This whole zone is a buy zone for me. I don't think you're getting back below 6. That's where we broke out from, but I think you guys well, and futures are in the actual coin. You want to be adding back to BTC here. More cash to work. No, Micah, that's probably. I was kind of doing the same. Like at first, I did like 25, 20%. You kind of have to define exactly what percentage of what, percentage of your overall crypto portfolio, or you have left of the position. Those are the two things to think about. So if it, I tend to overall portfolio, I tend to just change size so much. And I just interrupted my flow there. So like the portfolio, BTC versus alts and cash, and then when I'm thinking position specific, like Cardano, or in this case we're talking BTC, the percentages of each of those. So if you have a big overall move like we've had in crypto off of the 3,000 level, and we had 155% run already, position left basically. Basically has got, so I wasn't fully loaded on the lows, right? But maybe I was in 50% cash down there on, right? 50% of what I had on that means I'm like only 25. Does that make sense? I want to think about what you want as your core position. So like when we were trading UVXY, I wanted a delta short of like 1,000. And that's going to be 1 in 3,000 amount of risk I wanted to have. Because I figure that if I have a core short and I can keep a core short at like 45 and we make a new low to 25, there's 20 points there, right? So I'm like, all right, I pulled 20 grand out of just the core position. But then I'm going to get heavier and these hourly and 4-hour moves, right? So at some points I might be 3,000